Hello guys, so I'm going to do a review of for this week regarding my model. So about my model, yeah, what I'm looking for is a displacement lower for higher, but I'm bearish. So what I look for is displacement lower, then for price to come up, and we need to be above or around equilibrium, so a 50% level of the range. Then it needs to take liquidity on the lower time frame, like 5 and 1 minute, and then I'll take the short. So what I do is I measure the current dealing range, like so. Then there's a liquidity or the value cap, whatever, around the 50% level, and then I want to take the short. And liquidity that can be, in this case, for example, this is now a London high where you take the short in New York, or maybe what we'll see also in this video is that there are equal highs created, like so, and then the reversal happens. But I prefer to take a 15-minute, 1 hour, and maybe 4 hour dealing range and base my trade based on that. So, and of course, I'd like to trade in line with the order flow. So the daily order flow. So here we can see we have bearish. This is Monday's trading. This is where this week started. And before this week started, you can clearly see there are these equal lows resting like right here, and there. So therefore, I was bearish, looking for shorts, waiting for take out these lows. And if we go look in the future a bit, yesterday, we created another set of equal lows right here. You can see this more clear on the 4 hour. So let's see the 4 hour quick. You can see there's equal lows created in here with the low of yesterday. So maybe today, otherwise next week, I really think we're gonna take out those lows. So let's see. Let's go to the 1 hour. This red line, start of the week, midnight, as you can see, Monday. So here we traded up. So if you zoom out a bit more, you could say that we were inside of this dealing range. Where this is the high and this is the low of the dealing range, like so. So as you can see, there were some relatively equal highs resting here. Those were taken. Then we consolidated a bit, and then we broke lower. So that was Monday, making a deeper retracement. Also, what's kind of noticeable is I'm not really using it, but sometimes I look at it, is we have one push to the downside, then we go sideways, then we have our second push to the downside, and then we have our third push to the downside. And if I recall correctly, ICT once told after 3 pushes down, you can expect a deeper retracement or a longer consolidation. So that's exactly what Monday did. Monday made a deeper retracement, taking out inside internal liquidity, because this is the external liquidity right here, which is taken out right there. And then we traded back into the range, taking out internal liquidity to then take out Friday's low later on the week on Wednesday. Okay, so for me, Monday, I don't think it's something we could trade because, yeah, we was against my bias. So Monday was just a fake move. Then we traded lower. Then we have Tuesday Asia session. And what we can see here is going back with Asia range here. This is slow price action. So we have displacement to the upside and then slow price, no displacement to the downside. That's kind of risky. Do we have created a new dealing range? We did take this high, then we go lower. And this is the other low, this is still intact. So basically, my theory then is we are still in this bullish dealing range, right? So in here, and also you might sometimes you could say that Tuesday or Wednesday are creating the high of the week when bearish. So this does not fit that profile. And price is still respecting these downward candles, this order block right here. As you can see, it's still respecting it. Yeah, the wicks below, but it's still price actually closing around the mid level. So it's tricky to go short here. But once this moves happens, so Tuesday, I don't think there would be a trade, at least in the 1 hour. Let's make our lives easy and go to the 15 minute. Okay, so now we're in 50 minutes. What do we have on Tuesday? Well, again at a previous dealing range, and we are now trading from this high all the way to this low. Is no one. If we, yeah, you might argue this high, but no landings. Yeah. So this is interesting. If you are bearish, we have created a dealing range on the 50 minutes more clear because we took out this high, we took out all these lows, and now we continue to trading lower. Then London / Lunch created this high. Inputs are there, so they're not equal high. We took out this liquidity. And then here at 8:30, probably news took out this high, tapped into premium, and then price failed to go higher and then drops off. So this would mean that you can now measure this move. You know price has stepped into it. So once price did this and printed this candle, you have this lag from this low to that high. What do we see here? Well, price failed to graze an high, respecting the wick, closing the lower quadrant, traded into the 50, and then closed below the first quadrant. Then this place is lower now, but it's maybe far-fetched. I don't know. Okay, so I don't think there was much to trade on Tuesday. Of course, our possibilities were, and then finally we created this high with this low, and this low fills this entire imbalance, and then we go up with very slow price. This is not displacement. This is no willingness for price to say I want to go higher and higher. So then I would mark up this dealing range, and I'll go in Wednesday. So let's look at another time frames. For example, the 15 minute. Right. So we are at Wednesday now. We now have a very clear bearish dealing range, right? We took out this buy side liquidity, we took out all this liquidity, and then we get sideways for a bit, and look how price is going up in a very lethargic way. So what we have is an inversion of that value gap right here. Let's draw that one out. Just finding PD arrays that could be interesting. And I think this is the right one because it's also a propulsion block living over here. It's also being traded into right there. But looking at the 15 minute was very interesting. Because remember what my drawing was like earlier, right? So I said I want to see displacement and then trade price up a little bit, and then also a high or double tap, and then takes it out and then goes to the reversal. And this is what I mean, because look what we had right there. Double top, where in premium, inside of a fair value gap. So this is a very nice situation in which my model. Maybe you could argue the only downside is that it would be taken in London close, but to be honest, I don't really care. My model is playing out. It's at the beginning of London close, so that's just fine. It's not very late in the afternoon. The beginning, so that's very, very beneficial. So let's see at this moment how the price looks like on a lower time frame. I like the 1 minute, I like the I like to watch price over there. So here we are. This is the 50% level. We are the equal highs. If high got taken out, then price consolidated. You could also argue they are accumulating or distributing their long positions and now accumulating short positions. And look what happens next. We have this high that got taken out. Well, first signature, this displacement lower, then we go up, but we fail to create a high right there. And then we really displace this lower. And here we are displacing to the upside, and here we are displacing to the downside. We did not take out this high, but we did take out this, this low, but we did take out this low, and we created, we negated this value gap, we created a bearish value gap, and this is a 5-minute one, so another. And this is again the inversion of value gap of the 15-minute. Inversion. So this is the inversion of so price is touching the consequent encroachment after negating it and takes back. On the 1 minute, it creates this value gap. Why is this value gap important? Well, this is for two reasons. It's a nice value gap because it has displacement in it, and also this is the value gap. This is the candle that breaks this low. And you might argue also this low and this low. So at least these two lows are broken by this single candle. So when you have it, this is high probability or significant value gap in combination with taking out the high, stepping into a 15-minute inversion for value gap, and the 1 minute takes out this low. So this is basically your 2022 model of ICT. So I might place just a short after this candle has been printed. I might put a short here. Stop loss I always placed at the high right there, and the target which has some nice equal lows, so that could be a target right there, and it's also the 25% level. Okay, but usually pick your targets from high yeah, so of course it's very easy in hindsight, but I think that I would have done something like this and maybe left the runner to this low, or usually target rejection there, so probably I would target something like this and spread. So I put 1 to 2 would be it's very nice, and maybe I would take some partials or really high stops along the way. But anyway, this is the first occurrence of my model in a week, so it's Wednesday. And it could be a very nice, have the potential of being a very nice trade. So let's move on. Then let's go to the 1 hour again. So that's this business. Then that was Wednesday. Then Thursday comes in. So the draw is still those equal lows right there, right? That's not on target 3. Let's go back to the daily because it's early beginning of the week. This was the draw. Like that, that line. And by Wednesday, we took the short in here. On Wednesday and Thursday, really bashes through this equal lows. So let's see if there was an opportunity for me to enter Thursday. So Thursday, this price action is Thursday. So I'm only 1 hour. So what I would have seen that we used was this dealing range. So if this dealing range is high, because this high took out those previous equal highs, and this low obviously below this the dealing range low, and this low was created by this high. So you could also look back, and then we can see is there something in the 1 hour that's interesting. Yeah, there is some interesting stuff. For example, this inversion of a value gap. like that, like so. In one of ICT's recent videos, he explains that he uses inversion over a Azure value gap once created in large cell model in this case. So yeah, and also this level overlaps with the 75 level. At the 50% level, once this is created, 50% level, there is nothing too much, to be honest. Oh well, this bearish what you might say. I don't know, wait, this block is going above that is wick. And I think the cleanest one, cleanest PV rate stands out to me is this one right there. So let's see on the 15 minutes. So this is the inversion. Inversion to value gap in the 1 hour. You can see Asia is respecting it, then trades lower. And here again, this very lethargic price action during London. We tap in it, so let's see if there was an entry there. Okay, so here we are in 1 minute. Okay, so traded up. Here's the 25% level. Looks this value gap is being created, getting respected. Now we trade up, and then we touch it. So this is usually when this happens, just before lunch, I don't take the trade because what I often have experienced is when a high like this is created just before lunch, lunch is going to take this liquidity. Lunch is going to take London's liquidity. Other equal highs created also. Yeah, we might find these two maybe, but also look at these. These two are too smooth equal highs still in Asia, and price is so close. Yes, it may be deeper retracement, but again, I think I see 3 pushes that is the low. So what we have is first push sideways, second push sideways, third push. So after third push, you can expect what? The deeper retracement. So that's exactly what lunch is doing, making a fake move. Respecting the PD array right here, the value gap, and then trades up in here. So in here, you can clearly see it takes out London high, but it does not take out these equal highs. So that would be a risk entry, because I would very much like to see taking it out. Also Asia high, but so that's not required, of course, but it's certainly nice if you have it. But now we have a reaction on a session liquidity, session being London, was taken. Look what price is doing, it just taps PCE, but closing in the lower half, then trades back. And this is not enough for me at this moment because this low is still intact. But this value gap is nice to see, of course, because that's still in displacement. Like so, and then I'll wait, because this is a bearish 1 minute value gap. And then I would see how price is reacting to this value gap. Now you can see price is closing below constant encroachment, which is strong, and then moves away from it. So that's very nice. And then maybe I will watch only lots specifically this. You scroll nice. Also we go with 5 minutes on how it's behaving there. So in the 5 minutes we have this value gap resting right there. Now let's mark that out as well. So this is the 5 minute. And I also look to the lag to the upside, and I notice there are no value gaps created. This is completely efficient delivered price action up to this inversion value gap. And also we have this bearish with value gap, they might say that this one is reclaimed, like so. So there are two PD arrays now, the reclaimed bearish with value gap and the newly bearish with value gap. Because you trade over, you trade up, you trade down. So that's in 1 minute. Yeah. So this is the first confluence, the first clue that price wants to head down. Then we really see some displacement lower, breaking multiple lows. Then we go sideways at the 50% level. We take out this high. You're respecting the 5 minutes with value gap, and now we're trading away from it. So ideally, then in this case, I would enter here, but probably wouldn't get filled. So maybe then I would have entered here, I think, something like that, or maybe another way to enter the market is using CSDs. So this would be the first same delivery, because we are closing below the opening price of this order block, and then this is your second CSD then, so that would be another reason to enter at this candle. And the other one would be, of course, be there. It's already at 50%, so already halfway. Yeah. I think I probably might go short somewhere here. I think at this moment I've seen enough. My stop loss, I think we placed somewhere here, maybe there. Yeah, maybe at the high to be safe, just to be safe. And the target, let's see. Yeah, I think I do target too well. Yeah, like that. Something like this, I think. Because this is the rejection block, so I'm targeting that. So that's anyway. There's a second trade, second possibility in here for this week. That was trade number 2 with more potential. Let's go back to the 1 hour. Yeah, so we had that. So that was Thursday, and then today. So for today, so for today, this is obviously our dealing range. The range that we are in at the moment. Okay, took out this high right there, took some liquidity there. Lower. This one. So for today, what we have, obviously is dealing range. Price goes sideways. Asia is not doing much, and then also London is not doing much. Then we trade higher during lunch, and then again London we are playing around, and then finally at London close, what did price do? What we have is this 1 hour bearish value gap, and why is it an important one? Well, it's the first one. That's an important value gap. After taking out the liquidity, and it also takes out this low right there. When it takes out this low, that's the first value gap created. So yeah. So looking at a 15-minute, I don't see much in here, but you want to trade. Maybe this, maybe. You have this low to this high, then price goes down very slowly. Price reacting to this order block, and the price shoots away. But and that's possible if you are, because you are in a discount, you're below 50%. At that moment, you have equal highs like that, but those are taken, and after taking out those equal highs, price don't really, this price is lower, and instead it goes up. But I think the best trade obviously is this one, so let's go to the 1 minute. So this is just going price, just going sideways, going nowhere. Same for London, same for Asia. Asia made a little bit of a runner, and then we want to a little move to the upside. Then we wandering around opening price. Lunch is making a move to the upside. There we consolidated. Price is going sideways. And then what's interesting is this high then becomes important because there's a session high that is lunch high. So price here moving to the upside, hovers just below the high again, then takes it out. And this is some difficult price action. To be honest, I'm not sure how to enter this. And what we see, there's some equal highs. Those highs were taken. Price was not able to touch the consequent encroachment. Then it's respecting the bottom, indicating it might go higher. And then we have this weird candle. I'm not sure it is what time is it. Yeah, at least it's kind of a random time. This could argue respecting the 50% level with order block. It takes out this money, closing all the way here, then this other way around, comes back up and closes. That's an indication, right? It closes below. Then there's also a CST right there. So that's interesting. Right there. And then it taps in here again, and it closes way below it, trades up, and then really melts. So there's no fair value gaps or whatever created. But maybe just, I think there's something happening. Let's see in 5 minutes. I'm watching this fair value gap right here. So there's a fair value gap being created right there. So when this candle is printed, it closes way below the fair value gap, takes out this high, and closes below the high of this candle right here. So it closes back in the range. In the 1 minute, it looks like this. But that's kind of interesting. So now it trades back up in the 5 minute fair value gap, but a little more up, closing there, and now they're really closing below. So I'm not sure on how to trade and how to enter. This is very, in hindsight, of course, you would say, well, closing this right here. Step was going to there. And then you target is a 250 minutes. My target will be here. Price is not there yet, but it would be a minus 129. Or maybe I would target these equal lows right here. Then a bunch of equal lows. This one, this one, this one, this one, around 25% level. So maybe I will target that, especially on a Friday, something like this, for 1 to 8, or 1 to 9, maybe something like this. Yeah, that is in hindsight and previous price action. No. No, sure. But yeah, so that's basically for this week, price action for this week. Yeah, so using my model, I would have had around about 3 trades, which giving me over more than 1%. So 3%. Well, if I would have played it well, it would be the week where I would have gained around 4, maybe 5%. So I think that's very nice. Yeah, so that's it for today. Yes, so I'll speak to you next time.